Hi, in this video we will be doing example sums on the topic of guarantee of minimum profits to partner. We will focus on the case where the firm earns a profit during the accounting period and any specific partner is guaranteed minimum profits. So let's go to the example. Example 1. A, B and C are partners in a firm sharing profits in the ratio of 4:2:1. It is provided that C share in profit would not be less than rupees 37,500. Profit for the year ended 31st March 2019 was rupees 1,57,500. Pass journal entries in the books of the firm and prepare profit and loss appropriation account. So before we calculate the deficiency, let's divide the profits in the profit sharing ratio. So we'll do the working notes first. As per profit sharing ratio, A gets 1,57,500 divided by 7 into 4, and this is equal to 22,500 into 4, which is equal to rupees 90,000. B gets 22,500 into 2, which is equal to rupees 45,000, and C gets rupees 22,500. Now the guaranteed profits to C of rupees 37,500 is greater than his share of profits as per the profit sharing ratio, which is 22,500 rupees. Therefore, deficiency is equal to 37,500 minus 22,500, which is equal to rupees 15,000. Now there is nothing mentioned in the problem as to who has to bear the deficiency. So we assume that firm bears the deficiency. And that means that A and B will bear the deficiency in the whole profit sharing ratio in between them, which in this case is 4:2, which can be further brought down to 2:1. So the deficiency to be borne by A is equal to rupees 15,000 into 2/3, which is equal to rupees 10,000, and the deficiency to be borne by B is equal to 15,000 rupees into 1 divided by 3, which is equal to rupees 5,000. Let's go ahead with the journal entries. Solution. Journal entries. In the books of the firm. Date, particulars, LF, debit rupees and credit rupees. The date is 31st March 2019. The first journal entry, we need to transfer the profits of rupees 1,57,500 from the profit and loss account to the profit and loss appropriation account. Profit and loss account debit to profit and loss appropriation account 1,57,500 rupees. Being net profits transferred. The next journal entry, again on 31st March 2019, we need to divide the profits of 1,57,500 in the profit sharing ratio of the partners. Profit and loss appropriation account debit 1,57,500 to A capital account to B capital account to C capital account. A share of profits rupees 90,000, B's share in profits rupees 45,000 and C share in profits 22,500. Being profits distributed. To the partner's capital account. And the final entry is for the guaranteeing partners to bear the deficiency. A and B are going to bear the deficiency. So A's capital account debit, B's capital account debit, to C's capital account. Amount of deficiency rupees 15,000 against C and rupees 10,000 the deficiency borne by A and rupees 5,000 the deficiency to be borne by B. Being deficiency borne by A and B in 2:1 ratio. I'll remove the split and we can see the journal entries before we move forward to the profit and loss appropriation account. So these are the 3 journal entries to be passed. Next, let's go ahead to prepare the ledger account, which is the profit and loss appropriation account. Same sum, solution for the ledger account. profit and loss appropriation account for the year ended March 2019. Left side debit side, right side credit side. On either side, particulars, inner column, outer column, particulars, inner column and outer column. We will bring down the profits by profit and loss account 1,57,500. Net profit brought down. Two profits transferred to partners capital accounts. A, B and C. We'll divide it as per the profit sharing ratio and write the amounts in the inner column. 90,000 for A, 45,000 for B and 22,500 for C. The extra amount we need to give C, we'll add it to C, add deficiency, rupees 15,000 and take 37,500 to the outer column and less A's guarantee rupees 10,000. So I take rupees 80,000 to the outer column and for B I'll subtract his guarantee of rupees 5,000 and take 40,000 rupees to the outer column. Next I'll balance is 1,57,500 rupees. I'll remove the split and we can see the profit and loss appropriation account. This is the profit and loss appropriation account that is prepared by us. Example 2. P and Q were partners in a firm sharing profits in the ratio of 5:3. On 1st April 2018, they admitted R as a new partner for 1/8 share in the profits with a guaranteed profit of rupees 75,000. The new profit sharing ratio between P and Q will remain the same. Any deficiency on account of guarantee to R was to be borne by P. The profits for the year ended 31st March 2019 was rupees 4 lakh. Pass journal entries in the books of the firm and prepare profit and loss appropriation account. So we'll begin with the working note. As per the profit sharing ratio, We will give R his share of profits and distribute the balance profits between P and Q in their profit sharing ratio, which is 5:3. So R gets, the total profits is rupees 4 lakh, and R gets 1/8 of this profits, which is equal to rupees 50,000. The balance profits of rupees 3,50,000 will be shared by P and Q in 5:3. Therefore, P's share in profits is rupees 3,50,000 into 5 divided by 8, which is equal to 43,750 rupees into 5, which is 2,18,750 rupees, and Q gets 43,750 into 3, which is equal to 1,31,250 rupees. The guaranteed profits to be given to R as per the problem is rupees 75,000. As per the profit sharing ratio, he gets only rupees 50,000. So the deficiency is equal to rupees 75,000 minus rupees 50,000, which is equal to rupees 25,000. And this deficiency is to be borne by P as per the problem. Let's go to the solution. Solution. Journal entries. In the books of the firm. Date, particulars, LF, debit rupees and credit rupees. Date is 31st March 2019. The first journal entry, we need to transfer the profits from the profit and loss account to the profit and loss appropriation account. Profit and loss account, debit to profit and loss appropriation account, being net profits transferred. and the amount of net profits transferred is rupees 4 lakh. Next journal entry, we'll distribute the profits to the partners in their profit sharing ratio. To P's capital account, to Q's capital account, and to R's capital account. The total profits rupees 4 lakh. P share in profits 2 lakh 18,750. Q share in profits 1 lakh 31,250 rupees, and R share in profit rupees 50,000. Being profits transferred to partners' capital accounts. Same date journal entry for the deficiency of rupees 25,000 to be borne by P. P's capital account, debit to R's capital account. Deficiency amount 25,000 rupees. Being deficiency borne by P. I'll remove the split and we can look into the journal entries. These are the working notes at the top and the solution for the journal entries at the bottom. This is the first journal entry, the second journal entry, and the third entry for partner P bearing the deficiency. Next, let's go to prepare the profit and loss appropriation account. Same sum, solution, ledger account, profit and loss appropriation account. Profit and loss appropriation account for the year ended March 2019. Debit and credit on either side. Particulars, inner column and outer column. Particulars, inner column and outer column. By profit and loss account for the net profits brought down. Net profits brought down rupees 4 lakh. These profits needs to be transferred to the partners' capital accounts in profit sharing ratio. So two profits transferred to partners' capital account. P, Q and R. P gets 2,18,750 rupees. Q gets 1,31,250 rupees and R gets 50,000 rupees. We'll add the deficiency to R. Rupees 25,000 and take 75,000 rupees to the outer column. We'll deduct the guarantee which P has to bear, rupees 25,000. On deducting, we get P share in profits 1,93,750 rupees. Q's remains the same as 1,31,250 rupees. Now we'll total up the account. Rupees 4 lakh. I'll remove the split and we can see the accounts. This is the profit and loss appropriation account that is prepared by us. In this case, there is only one partner who is bearing the deficiency. So P bears the deficiency of rupees 25,000. Next example. Example 3. X, Y and Z are partners in a firm. Their profit sharing ratio is 5:3:2. Z is guaranteed a minimum profit of rupees 10,000 every year. Any deficiency arising is to be met by Y. The profits for the year ended 31st March 2019 was rupees 60,000. Pass journal entries in the books of the firm and prepare the profit and loss appropriation account for the year ended 31st March 2019. Let's begin with the working notes. We'll divide the profits in the profit sharing ratio. So as per the profit sharing ratio, X gets 60,000 rupees into 5 divided by 10, which is equal to rupees 30,000. Y gets 60,000 into 3 by 10, which is equal to rupees 18,000. And Z gets 60,000 into 2 divided by 10, which is equal to rupees 12,000. Now if you see here, Z is guaranteed a minimum of 10,000 every year. But as per this year's figures, Z has already got rupees 12,000 share in profit. So the deficiency amount is equal to nil or 0. So as far as the journal entries are concerned, solution: journal entries in the books of the firm. Date, particulars, LF debit rupees and credit rupees. The date is 31st March 2019. First entry is to transfer the profits from the profit and loss account to the profit and loss appropriation account. Profit and loss account debit to profit and loss appropriation account. Rupees 60,000 profits transferred. Being net profits transferred. The second journal entry, we'll distribute the profits in the profit sharing ratio. PL appropriation account debit to excess capital account to Y capital account and to Z capital account. Total profits 60,000. X share 30,000 rupees. Y share 18,000 rupees and Z share rupees 12,000. And the narration being profits distributed to partners' capital accounts. There is no third entry because there is no deficiency in this sum. I'll remove the split and we can view the journal entry. So these are the journal entries. Only 2 journal entries in this sum. There is no third journal entry because there is no deficiency in this sum. Let's go to the profit and loss appropriation account. Same sum. Solution for the profit and loss appropriation account. Profit and loss appropriation account. For the year ended 31st March 2019. Left side debit, right side credit. Particulars rupees. Again on the credit side, particulars inner column and outer column. We'll bring down the profits by profit and loss account. Rupees 60,000 to profits transferred to partners' capital accounts. X share of profit, Y and Z. X gets 30,000 rupees, Y gets 18,000 rupees and Z gets 12,000 rupees. Total 60,000 and we total up the account. So this is the answer for the ledger account, the preparation of profit and loss appropriation account. We will continue with example sums on the same concept in the upcoming video.